You mentioned the centrally planned economy and how America has drifted toward more and more of that as we try to control these high prices. Interest rates have now been hiked up. And, the Fed tried to raise rates in 2019, and they only got that federal funds rate up to about 2.5%. And you can kind of think of this as the base rate that other interest rates are based off of. And they only got them up to about 2.5% before they had to reverse course because markets were crashing. Well, now we've begun to raise rates again recently from zero. So I guess what I'm getting at in this centrally planned economy, as we move from quantitative easing and printing dollars over to quantitative tightening and destroying dollars, where does that leave the Fed between a rock and a hard place here? How high can they bring rates up? Are they ever going to be able to get on top of inflation? Something's got to give. What are your thoughts with the Fed actions, Doug?
I hate to second guess what the people in the Fed are going to do. They're just bureaucrats that have cemented themselves into cushy jobs. The Fed itself serves no useful purpose. It should be abolished. It's the engine of inflation in this country.
Part of the math there is you, the viewer, the listener, you can always go to usdebtclock.org. Right now, you'll see that the United States has more than $30 trillion in debt. That translates, which you can learn again over there as well at usdebtclock.org, to $250,000 in debt per taxpayer is what that comes down to. So you can begin to see how vulnerable this entire system is with this centrally planned economy. But, Doug, most people are only used to this centrally planned economy where the Federal Open Market Committee determines the interest rate. So if we did away with that, a lot of people wonder how that would look. Would we have a federal funds rate, or I guess it might even be called something else, but would that just float with the market somehow rather than being centrally planned?
Look, you can get away with stupidity for years and years. Look at the Soviet Union. It got away with a completely dysfunctional system for 70 years, but then it just collapsed. I'm not saying that the US government is anywhere near as bad as the Soviet government, but we're walking in that direction. The US resembles the old Soviet Union more and more and more, and it's going to end badly.
So people wonder how that would actually look. How would a Greater Depression play out in the United States? How could that affect the everyday citizen? How would that look?
The average guy, if he saves money, and most don't save money, but if he saves money, he saves in dollars. Unfortunately, his dollars are being destroyed at the rate of 10 to 15% per year.
Right.
And he's getting maybe 1% in interest at his bank. So this is one way that the standard of living of the average guy is collapsing. Second thing is that a lot of people have HR 10s or pensions, things of this nature, but these things are being hammered with the collapse of the bond market and the continuing collapse of the stock market. So they're not going to get what they thought was there either. Third thing is a lot of people rely on Social Security, but Social Security was always a Ponzi scheme from the very beginning. Saying that we've got $30 trillion of debt, that's only the tip of the iceberg, because they have all kinds of undisclosed liabilities. For instance, if the banks fail, the FDIC has limited assets to bail out the banks. It could be hundreds of billions of dollars or more. The Federal Pension Guarantee Corporation could be liable for hundreds of billions of failed pensions. That's actually dishonest accounting. It's probably more like 150 trillion of debt.
And how does a Greater Depression play out on the consumer level? Will an American be able to get adequate things like natural gas for heating and electricity and sufficient food?
Well, everything the government in Washington is doing is counterproductive to high standard of living in the U.S. They're trying to regulate and control things, and they continue printing up more money to try to keep the ball rolling. Frankly, I don't see any way out of this. Trends in motion tend to stay in motion until they hit a brick wall, reach a crisis. And at that point, anything can happen. And we're heading towards a brick wall crisis soon. I'm not talking a decade from now. I'm talking much sooner than that.
I'm thinking about if inflation runs away, would the government institute price controls, which basically don't incentivize anyone to produce anything if producers can't get above a certain price for it? Is that part of what we're talking about here?
Yes, exactly. The problem is that these people in Washington have power, and they believe that they have to do something. use their power. So yes, they'll put price controls on things, which discourages production. The best cure for high prices, incidentally, is high prices. High prices in an area mean that producers produce more. But in a highly regulated society that we're in today, it's hard for builders to build houses to make up for the housing shortages we have. So the problem is that trends in motion tend to stay in motion. And this trend is accelerating towards an actual economic catastrophe. The trend in motion is moving towards hitting a brick wall. And it's going to be ugly, and it's going to happen soon.